Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of the 13th through the 20th of March, where we'll talk about did Powell poke the bear market, and now we can also talk about did Silicon Valley Bank, SVB, also poke the bear market. So we'll talk about all the events we had in our eventful week, do our market analysis, get all of our input data to then go ahead and select our stocks, options, dividend payers, etc., that we want to look at for trading for next week. So again, thank you all for joining us for part one of our weekly trading game plan. And again, we'll talk about if Powell poked the bear market, if Silicon Valley Bank poked the bear market, and how we may make money, strategize, get some trade ideas to make money trading in the upcoming week of March 13th through the 20th. So we'll get started. Welcome, Easy Mike, MD. Thank you both for joining us in the live chat for a live stream. Hope you all did well in this eventful week. So here's our notes for part one of our weekly trading game plan for the trading week of March 13th through the 17th. Again, this is a Google document that's publicly available, accessible. You can find the direct link to this Google document in the description box below. We store our notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you should also be able to find the link to this Google Drive folder in the description box below, so you can refer back to this notes as well as our notes for previous weekly trading game plans. Good morning, Nug M. Thank you also for joining us. Just a reminder, if you missed me live on the Benzinga Money Mitch Start Swing Trading Show this Monday, the 6th, you may now see, and please go and like that Start Swing Trading Show. Again, it's the only live swing trading show I know of. I thought I had a good time talking with Mitch, so hopefully you all will enjoy that. So again, we'll see if you all like that. If you comment to Mitch that you'd like to see me again on his Start Swing Trading Show, just let Mitch and Benzinga know, and maybe we can appear on his show again. Good morning, Walter Lyons. Thank you for joining us. Glad to see you. Hope you're doing well as well. So we'll get started. We'll jump in. We'll look at the markets, how the markets ended up on Friday. As you can see, it was, pretty dramatic downside. Again, the big news right now is Silicon Valley Bank, a lot of fear. We'll talk about the fallout from Silicon Valley Bank, but again, we'll also talk about, what Powell said, some of the economic data as well. So we can see, Friday ended up pretty bloody. Many more decliners than advancers, many more new lows. We've now got 80% below the 50-week moving average, and 66% below their 200-week moving average. So again, very bearish on Friday. Heat map very red, just a few. Intel, JP Morgan, AbbVie, J&J, Tesla green, but otherwise generally red. See the news, banks, regulators facing a reckoning, stablecoin discussions, Brazil. And again, the focus right now is on banks, given the fallout from the Silicon Valley Bank, SVB. And again, we'll talk about all that fallout, hopefully help you avoid getting caught in that fallout. And then also, how can we possibly take advantage and make some money out of this. So we see oil, and we'll see this in the futures as well, is continuing to oscillate. Again, we'll see that oscillation, and we'll look for a stable state point in the futures. Natural gas generally declining, but again, when we see the futures, it looks like it's chopping around, establishing a support level, and we'll have to see where it goes from there. Gold and silver had a nice run. Again, risk off, fear. We'll see it in the bonds. We'll see it in gold and silver. And we'll talk about potential opportunities in those areas. Again, it's a big risk off move, as we'll see in the futures on Friday. Dollar weakening also helped with the dollar-denominated commodities, so the dollar weakened some. So we saw bonds go up, treasuries go up, dollar-denominated commodities go up, etc. Foreign currencies go up. And then we saw the yields on the treasuries drop down. So now the 10 years, significantly below 4, even the 5 years below 4, but the curve is still heavily inverted. So let's look at each of the indices. We'll see where we're sitting. Welcome, Roman Lubers. Thank you for joining us. Glad to see you here as well. So we see that, sharp drop off the last, pretty much this week. We had a little bit of a pump after some of the initial reaction to the Powell testimony was kind of negative, and I'll talk about some of my comments coming out of listening to the testimony both in front of the Senate and the House this week. And then, it was pretty hawkish, actually. And then we saw, the rest of the week was pretty steady drop down. We see the SPY's broken down out of its channel, kind of in free fall. We can see, the next support levels, in the 370s, mid 370s. But again, we're outside of that channel now, kind of in a free fall. So we'll look at the weekly. So again, big drop down, broke down through both the 20 and the 50 week moving average. So again, we're very bearish, very negative. And again, it was oscillating. We failed to make a real higher high here. So people are indicating now that this was, the rally that we saw here was just a bull rally in a bear market, as the trend, long-term trend, is still negative. So we'll look at the NASDAQ. Again, even though this week we see it was pretty negative, it still has some support on the 20 week. So it really didn't get hit as hard as the S&P this week. It still, again, does have some support. So maybe the downside risk in the Qs, surprisingly, although we'll talk about the impact of SVB on technology in general, wasn't all as negative this week. And maybe we'll get a little bit of a support bounce in the Qs. So we'll look at the Dow, DIA. Again, severe drop down through its moving averages, in no man's land now. And we got, significant potential downside in the Dow. So again, Dow stocks, high risk. Again, we might get a little bit of a relief bounce back, but then, more potential downside and quite a risk level down in the, 280s. Holly in the Bay, welcome. Good morning. Thank you for joining us as well. Russell got hit really hard. Small caps, a lot of these tech small caps was pointed out were in SVB. Again, dramatic downturn, broke down through both of its weekly moving averages. Again, kind of in free fall here. We got a little bit of support in the 170 area, but again, very negative sentiment right now. Again, we might get that, but then the trend definitely down. A lot of negative sentiment. The VIX had a nice popped up almost in the 27s, almost to 28. I think it actually hit 28 on a closer chart, but then very quickly retraced back down. Now it's showing about 23, 24. You see, they didn't react a whole lot to the Powell comments. It kind of popped over 20 and then retreated back down. And then it was the SVB stuff, the bank issues that caused the big pop. But again, it retraced pretty quickly back down to the 23, 24. Stays elevated right now. Let's see where we're sitting right now. It's at 24.80. And we'll talk tomorrow about, how we profited from this pop in the VIX and how we're playing this volatility going into the economic data in the coming week. We've also, as we'll see, we've got options expiration. It's a triple witching on Friday. And then next week, we've got the next interest rate decision. So, a lot of potential volatility catalysts going into the next couple weeks. So again, tomorrow we'll talk in more detail about how we're playing the opportunities and volatility. So we'll look at the group, sectors, industries, some potential opportunities that I've identified in those areas. Let me grab a drink a second. Okay, so if we look at the sectors from Friday, obviously everything was red, so risk off. So they went back to consumers' defensives. The healthcare is a little surprising. Cyclical is a little surprising as well. Back to energy. Obviously, the big negatives are financials. Also, we'll talk about probably more tomorrow, but we'll talk about the impact on the real estate sector and how I think there's some opportunities in discriminating in the real estate sector. Obviously, technology got hit. Basic materials got buoyed up a little bit from the weak dollar, but again, everything was pretty negative. As we've been talking, you see basic materials for the week was very negative. I still think there's an opportunity there with the weakening dollar, and it's been moving up in the sector rotation curve as well. So we see energy still very negative as well. Technology was higher on the curve, and I would expect, there to be more risk negativity in that area. Welcome to Blind Trader. Thank you for joining us. Just a quick reminder to everyone, this is not financial advice. We're not financial advisors. Everything in this and all of our videos is for educational and hopefully some level of entertainment purposes only. Again, this is my opinion, and hopefully it will help you figure out your trading strategy and how you can make money and succeed in your trading career. But again, none of our material should be considered financial advice. So again, for the monthly trend, again, we see real estate's at the bottom, financials. Again, we see basic materials starting to move up the curve a little bit, except for this week. But again, we got dollar weakening. So again, I think there's some opportunities there. And again, I think there's some downside potential in technology, given that it was towards the top of the quarterly trend and is slowly moving down. So we'll look at the individual industries. So again, Friday we will see gold, silver had nice runs, and again, a couple opportunities in gold and silver, also other precious metals. So we had the combination of the dollar weakening as well as the risk off mentality, as well as the issues with banking in general. Also, we'll talk about the Silvergate winding down and its effect on the cryptocurrency. Again, all I think are positive catalysts for gold, silver. It had been trying to form a nice rounding bottom. So again, I see a lot of upside potential in gold, silver, and possibly some other basic materials, metals, mining. Couple I wanted to point out at the very bottom is aluminum. We've been talking about the rotations in and out of aluminum. Also, we see all the REITs got hit. Very negative. And again, there's a lot of discussion about office space, the issue risk in office space, and I think they hit all the REITs equally. And I think when there's some discrimination between the office REITs, the mortgage-backed REITs, and some of the other industrial and other types of REITs, land-based REITs, I think we might see some potential opportunity in those. non-office space, non-mortgage backed REITs. And again, we'll talk about some opportunities we took this week and maybe some subsequent opportunities in those areas. So again, for the week, not a whole lot of positivity, just some utilities. Another one I wanted to point out in the weekly, and we'll talk about this in more detail tomorrow, is uranium. So we've been talking about the rotation in and out of uranium. You also see coal and steel. So we've been seeing sector rotations in and out of all of these. And again, tomorrow I'll talk in more detail about some potential opportunities in uranium. Again, we have a video that goes through what I'm doing right now in more detail of how to do this, how to screen for stocks in a particular industry. But as kind of an exercise for anyone who's a little bit newer to trading about how you can do this, I want to leave this for tomorrow. Is we did identify some potential opportunities in uranium, so I would recommend do what I just did and click on that. Industry in the groups tab, look at these charts in uranium and pick the ones that you think might be potential swing opportunities, maybe scalp opportunities. Which ones do you like and why? And then hopefully come back tomorrow and I'll tell you which ones I picked and why out of that potential opportunity. But again, I think that rotation out of uranium right now, getting pushed in part down due to sector rotation out of energy is a nice opportunity that we're going to look at making some money on again in the very near future. So I hope that all helps. Okay, so let's talk about the economic data we got this past week. I'll bring up the calendar for next week, although I did pull out some of the notable events upcoming. Also, just a quick reminder, as this economic data comes out, we have a Surf the Markets channel in our Discord. Our Discord's free to join. You can find an invite in the description box below to our free Discord. And again, as this economic data comes out, I try to capture that data from investing.com and post it to this Surf the Markets channel in our Discord as quickly as possible. You can also see we have an automated news feed for Market Watch Economy, so articles that they post interpreting this data also get posted to the Surf the Markets channel in our Discord. Let me see if I can zoom that up a little bit. Also, you'll see recently I've been posting, as I noticed that the dollar was weakening, its effect on dollar-denominated commodities, the VIX, futures, etc. So again, there's been a couple days of opportunity where the dollar was weakening a bit. I think it's down under, let me look and see it. Right now, it's not showing, so. So again, join our Discord. You can watch the Surf the Markets channel as well as our other channels for additional information and news. So last week, not a whole lot Monday, and then here's my notes from Powell's testimony on the Senate before the Senate Banking Committee on Tuesday. And again, we'll talk about did Powell poke the bear market? And here's some of the quotes that I pulled out of his comments. Ultimate level of interest rates likely to be higher than previously anticipated. So we were talking, a lot of people have been talking about mid fives. Now they're talking potentially 6. Process of reducing inflation has a long way to go. So again, their primary objective right now is to kill inflation, and they're saying, hey, we got a lot of work to do, and the only 2 tools they have is raising interest rates and reducing their balance sheet, which they're also doing. But the one that's most notable and has the most effect on the markets is increasing interest rates. So obviously, they're telling you rates are going higher. They've got a long way to go. It's going to be higher than what people have been thinking, what the market's been thinking. They're prepared to speed up rate rises if warranted by the data. So the fact everyone was thinking 25 basis points, this actually triggered an increase in the probability in the Fed Watch tool that as of earlier midweek, they were factoring in, I think it was a 70% chance of a 50-point rate hike in in the upcoming March meeting. That dropped off a little bit as the SVB fallout started to hit, and maybe if we have time, we'll talk about that in more detail as well. Easy Mike says there's an emergency meeting on Monday. I have not heard that. I would suspect that if that were true, that would be related more to bank regulations and the state of the banks than interest rates. So I don't really expect to hear anything more about interest rates, etc. So then on Wednesday, his testimony before the House Financial Services Committee was pretty much the same pitch, same scripted speech coming out. Also, you notice when Powell has these testimonies, they actually release his opening remarks ahead of time. And so on some of the channels like CNBC, I actually, heard a lot of these, and the market reacted even before he began speaking. And then the Q&A was where they grilled him, but that I won't get into the politics of that. But there really wasn't a whole lot of additional data, in my humble opinion. So on Wednesday, the only thing I really picked off out of that testimony before the House Financial Services is that they're sticking to their 2%. And he justified some of the reasons why 2% is their long-term inflation goal, but they are very adamant that they're not going to move from their 2%. So those that were assuming that they would move up their inflation goal, right now they're standing firm at their 2%. And so again, that means they've got a long way to go. They're going to really have to hike interest rates to get demand down to the point where they hit their 2% goal. So then Thursday, we got some jobless claims data. This was viewed as positive because it shows that they are making, some progress. There were higher than expected jobless claims. So the labor market loosening up a little bit, not quite as tight. So that was Thursday. And then Friday, we got actual payroll data. And that was a little bit negative because the payrolls are higher than what was expected. So again, we got mixed data. Even this data on Friday is quite mixed. Participation rate is up, so that's a positive. But the employment rate, unemployment went up a little bit. U6 unemployment went up a little bit. So again, a little bit of loosening in the employment market and the job market, which is a positive. But again, this data was pretty much overshadowed by the SVB, the Silicon Valley Bank news. Also, there was some discussion. Average hourly earnings was down a little bit. So again, possibly some relief on the wage price spiral issue. So again, this employment data, although it's mixed, would have been positive in terms of the Fed making some progress on potential inflation inputs. But again, that was just totally overshadowed by the SVB fallout. So again, I'll spin through both this week's data and next week's data, but just some highlights coming up I wanted to point out. And I link these in our notes document so that if you want to get a definition of what these various economic data points mean, you can click on the links in our notes. You can also do this in the economic calendar and investing.com. Again, if you don't know what CPI or core CPI is, etc. So Tuesday, we've got, again, some potential volatility events, some important data points that are inputs into the Fed's interest rate decision coming up. Tuesday is CPI data. Fed looks at core CPI. Then PPO, so that's consumer price index, and we got producer price index on Wednesday. Both of those are inputs into the Fed's decision. And then Friday, we've got consumer sentiment, not as much of an input to the Fed decision, but interesting from the consumer's strength standpoint, their outlook. And then again, on Friday is March options expiration, and it's triple witching. So we've got weekly, monthly, and also futures expiration on this Friday. So again, potential for increased volatility. So if I didn't say good morning already, Ollie in the Bay, good morning. You guys are having a good economics discussion. Thank you for sharing your knowledge in those areas as well. So let's look at the calendar for this week and next week. So again, durable orders, factory orders, pretty a little bit down. Wholesale inventories in line. Crude oil stocks down significantly, although again, we just see the price oscillating between low 80s and 75 right now. I thought the JOLTS job opening data, more job openings. Again, that's not what the Fed wants to see. So people are still hiring. Hiring is competition. Trade balance pretty much in line. Oil imports. Here's the job cuts. So again, job cuts is less than previous. So layoffs isn't really having a major impact. Although we have higher jobless claims, higher initial. Natural gas storage, you see, was down more than expected. But again, even though that says, okay, the supply is diminished, we still saw natural gas didn't really run up. In fact, it declined a little bit towards the end of the week. Again, non-farm payrolls was, up a lot more than expected. Baker Hughes rig counts going down. So again, the oil supply is going down, but it really is not impacting the oil price significantly. Again, those data points, as we've been talking about probably for a month or so, isn't really impacting the oil and natural gas prices like it used to. We're just not seeing the dramatic reactions to those data points. Again, I think it's more technical and sentiment oriented than anything right now. So again, Tuesday, we've got an OPEC report. We've got CPI. CPI is going to be heavily watched. We have one FOMC member talking, although they should be hitting their quiet period pretty quickly. So we won't get that volatility due to the Fed officials talking. Then, Wednesday, we've got PPI, retail sales. But again, PPI is an input. Again, we got oil. Pretty much the standard building. So the housing, the building market, again, been in a recession. Friday, we've got some production, some manufacturing data, and then consumer sentiment. So again, plenty of volatility data points coming up. We are still in earnings season, so you can flip over to the earnings calendar, but that should be winding down. But we can see, who is reporting earnings. One of the things I'll talk about, I guess I'll talk about it just briefly right now, since we're talking about earnings, is companies that banked at Silicon Valley Bank, had large cash holdings in that bank. You're starting to see reports coming out of they're having to disclose that they had what percentage of their cash holdings did they have at Silicon Valley Bank. So as part of their earnings, if you're watching or listening to earnings reports for a particular company, particularly tech companies, listen for if they have exposure to their cash holdings being, essentially stuck in SVB, and if they're taking any kind of impairment, how that might affect their business. So again, we're going to talk about, when we get to our strategy section, a lot more of the potential fallout from SVB and how that could have a domino effect on the economy and various industries. So. But again, you can scroll through and see who all's reporting earnings. How will that affect you? Anything you're interested in buying, or if you're holding it, how that might impact you or sympathy plays thereof. And then we've got the next FOMC meeting the week after. So Again, a lot of focus is going to be on the impact of all these data points, as well as people are talking. Is the Fed going to consider the failure of SVB or Silvergate in their decision in terms of the impact on the economy? I won't talk about my opinion on that right now. We talked about the earnings calendar. We also have a feed to earnings reports in our Discord, so you can see in the earnings report channel in our Discord. And again, there's an invite to our Discord's free to join. You can find an invite in the description box below, so you can watch as the earnings come out. I believe there was also where they were releasing their exposure to SVB was coming out in that channel as well. Okay, let me grab a drink. We'll jump over to Webull and we'll look at the markets. I'll show you where the earnings calendar is there. Okay, so I'm on the online browser version of Webull. As you can see, Webull's still offering the 12 free stocks. So if you're not already using Webull, as you see, we use Webull for our market analysis, our due diligence. We do the vast majority of our trading in Webull. I'm using the online browser version. So for market analysis, I like this markets tab. We can see the distribution histogram for advancers, decliners for Friday. Again, we see almost like 4-to-1 decliners again, and then percentage of decliners was significant. So it's not all a trivial decline, and then we have a small number with a very large decline. Advancers was very weak. So again, very bearish. Interesting that the NASDAQ is showing, less outflow than the NYSE. So I'm guessing that that's where most of the banks are, even though SVB is a tech bank and technology would be expected to be more exposed to that. But again, we see significantly more outflows out of NYSE than out of NASDAQ. So that's a little interesting. Again, you can see the earnings calendar here in the earnings or in the calendar section. If you hit calendar, hit earnings, you can see the near-term earnings. So before market open, after market close, so who's reporting soon. And then let's look at the best performing industries and ETFs for the week. So again, Friday's going to be mostly red. Investment holding companies a little bit positive. Food and drug retail, just a little positive. Aerospace and defense, a little positive. Some specialty retailers, semiconductors. Utilities, again, very defensive. Food and tobacco, again, that's a consumer defensive. So down on the Dow as expected, small cap bears. So again, here Russell, small caps, again, high risk. Short on the Russell, short on mid caps, short on the Russell. So again, a lot of focus negative on the small caps, mid caps, the Russell. So we would expect more downward pressure there, although all of them are going to be down on the Dow. short mid caps on the S&P, mid caps, small caps, S&P in general. Up on the VIX. Again, we'll talk about how we're playing the volatility. It's interesting. There's a spike, so spike on the VIX. Small cap bear, so we saw all those guys. Short the Russell, small caps, and shorting Europe, shorting China. So again, all very downtrending negative. Industries pretty much negative. Let's see if there's any positivity. One in technology, China. Otherwise, pretty all negative. Now, commodities should do a little bit better. I'll get gold, energy transition, gold and silver, gold and silver. Total return. +25 year coupons. We'll see where the treasuries really bounced up. 25, 15+ tips. And currencies, foreign currencies all had a nice recovery. We'll go jump over and look at the futures. Okay, so here we can clearly see, the downtrend, the bearish market. Dow fell off, S&P fell off. Again, it's, in no man's land, free-fall. Dow's definitely in free-fall. Nasdaq's trying to hold that, support level. If it breaks down, though, it's got, long way to drop. So, a lot of negativity. Again, there's going to be a lot of fear with this SVB. What's the impact going to be? And we'll talk about all that fallout. Plus, what's the Fed going to keep hiking? If so, by how much? You see that big spike in the VIX. See this oscillation that I keep talking about in oil. It just bopped up a little bit above 80 and then came back down. Bopped down to about 75. So it looks like it's oscillating around, maybe 77. High 76s. So we've talked about that the refill of the strategic petroleum reserves somewhere between 70 and 75. So, we've got a strong floor, but again, it just seems to be oscillating up and down. Now you can make money trading that, Gush long, drip short, UCO long, SCO short. So you can trade these oscillations and make money. Just once it, if it finally reaches a steady state or breaks up or down, that's what we'll be looking for. Again, natural gas, we see it ran up, popped up to 3, and then retraced down. But again, it's been, just not quite barcoding, just slowly trending down lately. Although it didn't, I don't think it's really going to go back down and retest the 2. Looks like we might be getting a bottoming. You notice when we get this barcoding activity on natural gas, it tends to show a trend reversal. So we'll be looking for that and, a swing up or swing down, whichever way that trend's going to go. But again, typically, in my humble opinion, my experience, when we see that kind of barcoding activity, that's where we get the trend reversals. Again, we see the nice pop up in gold and silver. Gold actually popped up, broke a new high. Looks like it's got a nice strength. We might see some retracement, just some profit taking. Silver didn't have as big of a pop, and I think there's a significant opportunity there. Silver's got plenty of upside. If gold breaks this 1900 level, we might see a run up to the previous high. So again, plenty of upside in gold, and we can talk about some potential ways that you can play these upswings in gold and silver. So we see it, both of them formed a nice bottom and then a nice swing back up. So We've been watching palladium. It looks like it's kind of bottoming. Hasn't made a strong move either way. It's been kind of just trending down. So we're watching for an opportunity for that trend to reverse and swing that back up. Again, a lot of the commodities were way down. Wheat again had a bounce, so it looks like it may have found a bottom and bounced. Lumber's been on a roller coaster. Looks like maybe it's found a new stable state. And then again, we see these big pops in the treasuries, which again, that's strictly a risk off move. People fled stocks, bought bonds, drove the price way up and the yields down, which is counterintuitive to the trend of the interest rates. So again, I would expect this to revert because we know bond yields have to compete with the Fed interest rate hikes. We know the Fed interest rate is going to be somewhere between 5 and 6, and bond yields right now are below 4. So again, my humble opinion, this was just strictly a risk off. A lot of these moves, gold, silver, treasuries, strictly a risk off. Bail out of stocks, jump into bonds, jump into what utilities, things like that, and into bonds. So I expect some reversal in that, and then a stabilization as we go forward. So again, be prepared for that retracement. We might get another risk off day early in the week, and then a reversion back as things calm down a little bit. Okay. So now let's talk about all of our strategies. We'll talk about this fallout from SVB. How are we playing all of this? How can we protect our capital, preserve our capital, and potentially increase our capital through all of this? So firstly, as we discussed, did Powell poke the bear market? Yeah, a little bit, but the market shrugged off his comments. As we've talked about for some time, they're just, the market's not listening. He's telling you rates are going up. They're going to be higher than even the market is expecting. They got a lot of work to do. They're not going to change their 2% target. But in general, the market kind of shrugs that off pretty quickly. So we saw just, a little poke. The bear flinched a little bit, didn't really wake up. I think what really poked the bear market was this Silicon Valley Bank failure and the preceding Silvergate Capital. So Silvergate Capital announced they're winding down operations. That impacts the crypto business. So there was fallout there. So again, I think there's a lot of opportunity in gold and silver because where are you going to put your money to store value? People thought and as an inflation hedge, people thought maybe crypto was it. Now crypto's getting hit with failures, frauds. We talked about that and warned our BeachBum trading community about the fallout from FTX, and that had a domino effect, and we're continuing to see that as various other players in that sector are falling. And now we've got the Silicon Valley Bank, and there's going to be a similar fallout from that as well. So again, be careful. We can't assume that they are idiosyncratic. They're the only one. It's not going to have a domino effect. So again, think about and be prepared for further fallout from this SVB. There's also going to be a lot of fear. Bank failures cause a lot of fear in people. We've been through the 2008, 2009 financial crisis. I won't talk too long about all that. But again, there's going to be a lot of fear. And I think, people are going to, you're probably going to see other bank runs if people think that their bank is at risk like Silicon Valley. So let's talk about, what do we know? What do we think in terms of potential fallout from here? Where obviously the depositors, people that have money in Silicon Valley Bank, SVB, if they had more than $250K in an account, FDIC insurance only covers $250K. So if they had more than that in their account in SVB when the FDIC took it over, anything above that is at risk, and theoretically they may not get that money back. Reality is that money's going to be locked up for some period of time. Brian Sullivan on CNBC had a good interview with Tom Sosnoff. You guys probably know Tom Sosnoff created Thinkorswim, created Tasty Trade. I always liked Tom Sosnoff. I've listened to his Tasty Trade stuff, followed him for quite a while. And the point being is that he made the comment that in the 2008 financial crisis, pretty much, and that was 500 banks were at risk or failed, and pretty much all of the deposits were eventually paid back. So people who had money on deposit in banks eventually got their money back. But it doesn't allay their fears, right? And it doesn't mean that money isn't going to be tied up for an unknown period of time if a bank does fail. So again, a lot of fear. And again, I won't bore you all with stories, but we do have relatives that went through, the Depression and things like that, how they reacted and pulled all their money out and put it in their mattress or coffee cans or floorboards. And although I don't think we'll see that extreme of a reaction, I think it will scare some people, and I think we'll get a fear-based reaction probably early this week, and then. I don't know if Yellen came out and was trying to allay some of the fears, although she did hint that there may be other banks at risk as well, and there's been some discussion of that. So in addition to those that just had money deposited there, there's discussion, a lot of the startups did business. They had their accounts there, and those accounts may be frozen at this point. And, startups, although they're typically not publicly traded, so it's not a particular, ticker symbol that we would be trading, that they're at risk, as are their employees. There's a risk that those employees are not going to be paid, that they'll not be able to do payroll, and that those employees will have to be laid off. Well, obviously that then impacts the employment market. So unemployment may go up, which actually that's even though that's a negative for people, the Fed would like some loosening in the labor market. The other negative, though, is if they owe money to a supplier. So if you think about who do these people buy from, they might owe money to them. They won't be able to pay the supplier. Therefore, the supplier doesn't get paid. And again, we get this domino effect. So we can think about, okay, who does business with people that have money tied up in SVB? So again, I would think about that, particularly if you're thinking about a company you want to buy into, is do they have any exposure to any of these companies? Also, technology companies with accounts, large amounts of cash stuck in SVB. As we discussed, you're starting to see disclosures. Roku is one that came out, said they had a large amount of their cash was tied up in SVB. Again, that cash is likely to be frozen, which means they can't access it. Now, large companies that have good cash flow and, large war chests of cash are not at high risk for, some period of time. The ones that are at risk are those that are unprofitable. So your small cap tech firms, if they're unprofitable, if they have a high cash burn, low to no free cash flow. So again, if they're unprofitable and they don't have a lot of cash on hand, they may go under. So we may see a cascade of particularly small tech companies going under pretty rapidly, potentially. If they just run out of cash, then they can't pay their employees, or their employees leave because they think they're not going to be paid. Their suppliers may accelerate payments and less favorable terms because they think they're at risk of not getting paid. So again, think about all of these in the companies you're either invested in or potentially investing in as consideration, so that you don't get stuck and burned by the fallout from all of this. And again, this is going to be a domino effect. So again, as these small tech companies go out, like I said, their suppliers then are not making as much money. So we're going to see this go on for some period of time, this fallout and the domino effect. And again, right now, any banks are pretty much in the same boat. So you saw the whole financial sector went down. Any bank, even though it may not have similar risks, but again, there'll be plenty of discussion and analysis and I assume more scrutiny of these banks as to see which ones are actually at risk of a similar default as SVB and which are not. And there'll be a lot of discussion. Banks will come out and say we don't have that problem, we don't have that risk. Companies again are disclosing whether they have risk or not from SVB or Silvergate. There was so we've got two right now that are a significant risk, sources of fear. So I think again, stay calm, don't panic. BeachBum traders don't panic, right? How long ago did we have that as our theme for our weekly trading game plan? For quite a while. And that's the key: is don't panic, don't pull your money out at the bottom, and you'll be okay in time. So we've been talking. One of our strategies, is loading up on dividend payers. Again, while we wait till the market stabilizes, picks a trend, and we know what the environment's going to be going forward. We've been loading up on dividend payers to get paid while you wait. So again, we've released some additional videos. You can see all the videos and how to find the best dividend payers. And then tomorrow we will review in detail our dividend payers spreadsheet, look at where we see potential opportunities for more dividend payers. Then also our option strategies. I grab a quick drink and then I'll talk about that as well. So again, another strategy we're employing to get paid while we wait is by selling and buying back calls, covered calls, selling and buying back puts. Again, in the market decline, that opens up, and the increased volatility, that opens up some opportunities to make money selling puts. When we get a rebound, etc., we make money selling and buying back calls. Again, buying back calls is an opportunity when the market declines. So we're busy looking for opportunities in those regards, and we will review specific opportunities in our puts ROIC, return on invested capital spreadsheet tomorrow. It looks like there are some additional opportunities in that area. So again, we hope you all will come back again tomorrow, 10 a.m. Eastern time for part 2 of our weekly trading game plan. Got a couple minutes if there are any questions. If I missed your question in the chat, I apologize. Please throw your question back up and I will try to answer that. Again, tomorrow we will take all of the data we've talked about, our strategies, all this information, and we will select our top swing trading stocks to watch, put on our watch list and our bullpen and our shopping list. Again, we're also going to talk about it. We're going to review our ETFs that have potential opportunities given the futures, etc. we looked at. We'll look at our potential dividend payers, what else can we do to get paid while we wait, and then we'll talk about our option strategies, and again, some additional opportunities to make money, essentially scalping options given the current market conditions. Okay, if there aren't any other questions, please feel free to put questions in the comments below. You can also ask questions in our Discord. Again, our Discord's free to join. You can find the invite in the description box below. Please tag us so we're notified if you ask a question. We have a suggestion box. We'd love to hear your feedback on everything we do in the community, our videos, our game plans, our Discord, etc. You You can also find links to our Discord. We also have a Facebook group you can ask questions in, and you can find links to those and to all of our social media sites. You can contact us directly via social media as well. In the links section on our homepage, beachbumtrading.com, bum without the U. So again, you can find links and many ways you can contact us and ask questions. So thank you all for joining us. Again, if you missed our appearance on Mitch's Start Swing Trading show on Monday, you can go see that. Please give it a like. Please let Benziga and Money Mitch know if you would like me to appear on his show again, and maybe we'll see if we can make that happen. And again, I hope to see you all again tomorrow, 10 a.m. Eastern Time, for part 2 of our weekly trading game plan. And again, we'll pick our individual stocks. We'll talk about more trade ideas, more strategies. How can we make money and succeed in your trading career in the current market conditions? So thank you all for joining us. Good luck and have a great day.